Good day, ladies and gentlemen. Today I want to talk about two indicators that I regret using as a beginner trader. The first one is called Bollinger Bands, while the other one is called RSI. RSI stands for Relative Strength Index, and that is an oscillator. Okay, so their rules are very simple, very easy to use, beginner friendly. Okay, the very first one, let me talk about RSI, Relative Strength Index. Now, this one has a range of 0 to 100, and the marks to watch, rather, or the levels to watch, is the 70 level and the 30 level. Okay, so I'll be pointing some things out here. So the idea is that once price gets to 70, and goes above 70, from 70 upwards is considered an overbought region, meaning the wise thing to do at that point is to sell. Okay, so price is expected to come down once it gets to 70. Okay, while when it gets to 30 and it goes below 30, from 30 under, this is 30 here, I hope you can see 30 right here. So that's 30, and this is the 70 level right here. Okay, so from 30 below, the price is considered to be oversold. So the wise thing to do is to buy. Very simple and straightforward rule. Okay, now also in the same vein, this is the Bollinger Band up here. This is the Bollinger Band up here. Bollinger Band has three bands. There is the outer bands, two outer bands, okay, and one inner band. Can you see that? Two outer bands and one inner band. Now the idea is, once price gets to the upper band, I'm talking about this upper band here, once price gets there, it is considered to be, or once price gets above it, the price is considered to be overbought. So the wise thing to do is to sell, because price is expected to come down once it gets to the upper band or goes a little bit beyond the upper band. In the same vein, once price gets to the lower band, it is considered to be what? Oversold. So the wise thing to do is to buy, because price is expected to go up. Now I'll tell you the truth. You see, these two indicators, they worked hand in hand to help me blow a $200 account when I was starting out, because I was following it exactly the way I just spelled it out. Anytime price gets to the top, I'll place a sell trade, I'll enter a sell trade. But the funny thing is, sometimes, most times, not even sometimes, once it gets to the top and I place the trade, the price keeps going up until it hits my stop loss. It will get to the bottom band sometimes and I'll place a buy trade, but it will keep going down until it hits my my stop loss. So when I started seeing success when it comes to forex trading was when I now went back. These things are just like shortcuts. They are shortcuts. So I would advise you as a beginner trader to start from here, else you blow your account. They are shortcuts. There's no shortcut to success. You need to go and do the work. I was running away from the work. I wanted something simple and easy. I could just, when it gets here, buy, when it gets here, sell, all those kind of things. I didn't really understand Forex. I started seeing success when I went back to understand, to study what Forex really is. Studying price action. That's when I started seeing success. Studying price action, What is supply? What is demand? What are the chart patterns? What is double top, triple top, double bottom, triple bottom? What does all these things mean? What is a flag? What is a pennant? So when I started understanding all of these, what is a wedge? That's when I started seeing success in Forex. Okay? Candlestick patterns, all these things, you need to know them. When a doji shows up on a chart, what does it mean? What is bullish engulfing? What is bearish engulfing? You need to have that knowledge. You can't skip it. You can't jump it. Okay? So you also need to, when I mastered that, I then moved on to something else called risk management. Risk management alone, even though you are not good at technical analysis, if you are good with your risk management, you will last. You will succeed. You will do well considerably. If you now combine it with technical analysis knowledge, you are good to go. Risk management will help you protect your bankroll, help you protect your deposits. You understand? So risk management, then I went on to trading psychology. So that's the journey. I can tell you for free, you need just 4 things to be a successful Forex trader. Anybody that is not doing well in Forex is lacking in one of these things I want to mention. 1, technical analysis. You need to go and master it. Then, fundamental analysis. You need to know the social economic news that impacts whatever currency, whatever pair you are trading. You know, so technical analysis, fundamental analysis, then you have trading psychology, and lastly risk management. Once you can master these 4, you are good to go. So my advice to beginner traders that are still using these indicators, don't throw the indicators away. They are not completely useless. Instead of basing your trading idea or strategy on them, let them be like a means for extra confirmation. They should just be something that will give you extra confirmation to either enter or exit the market. All right.